what we can do is not only satisfy the exchange, defer the taxes without the panic, having to adhere to the IRS guidelines, relieve folks of their active management responsibilities, more times than not, significantly increase their passive income. And so it's a beautiful structure for so many of, again, the baby boomers and seniors that are dying to get out. They just don't know how to do it without having to pay tax.
Good morning, great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I'm your host, Corwyn J, Melette, broker and owner of Exit Realty Locums Group in beautiful North Charleston, South Carolina. Hey, if this is your first time listening to this show, you are in for a treat because our mission here is very simple. That is to empower our community through financial literacy and real estate education, guys. We're legacy building. That's what we do. So got to give a shout out quickly to those who listen to us faithfully. Look here, y'all in Muddy Mullins and Marion, y'all showing out, y'all listening, y'all tuning in. And most importantly, y'all giving feedback and shout outs back. So I appreciate you guys up there who tune in to us faithfully. I got to give a shout out to those who listen to us in the low country from Hollywood, what you know, no good, all the way out there to Monkey's Corner. And y'all know my mama live out there, y'all. Pastor Vanderbilt Evans Sr. And look here, y'all know if I put that senior on, that dude will jack me up. And I love him for it. And look here, his beautiful wife, Elder Evans. Thank you guys for tuning in so much. The Q family and all those countless people in between, guys. Thank y'all so much for tuning in today. I told the guests backstage today, I said, when you're talking money, you're talking my language. They got such a thing out there legitimately as a language is gibberish. Now, I don't understand gibberish, but I understand money. Today we have with us none other than Mr. Ben Carmona. Now, Ben is the managing partner with Perch Wealth. And look here, I love the name of the company because that means that you sitting on a pile of it. Does that make sense?
Yeah.
Y'all saw that right there, right? So we have none other than Ben with us today, and he's going to talk to us about strategies. So this is what I want y'all to do, guys. Look, I always ask it. Many of you comply. But today, if you have not been complying, I need you to get in order because we're going to be talking about some great things. I want you to get a pad. I want you to get a pen. I want you to be ready to take some notes. And I want you to remember this guy because this is the guy that you're going to want to talk to. So, Ben, how are you doing today?
I'm doing great. I know why you have a big following. The energy you bring to the table, I love it. Good to be here. Thank you.
I appreciate you taking time out your busy schedule, guy, to be here with us today. From the bottom of my heart, man, I really appreciate it because I know what it takes to make these appearances. But what I will tell you and start with is, Ben, thank you for what you're going to drop on our folks today. And I'm going to ask you right now to start dropping. So first question I got for you, tell our listeners who you are, high level, and what it is that you do.
Sure. Again, thank you. Great to be here. I'm a financial advisor, but I'm not your typical financial advisors that's doing stocks and bonds and mutual funds and annuities, insurance. All we do is we're involved in real estate syndications. It's all I've done for 20 years. And a lot of our business is really on the 1031 exchange front. I'll stop there. I try to keep it high level, Corwyn. I get in the weeds sometimes. You got to whip me and get me back in the shape. Stop there. You tell me.
So I like how you started. So if you're a financial advisor, that means you advise on money. You advise on finances. I mean, That's the name. That's the title of it right there. So what got you into this space? Like, what was it that kind of drew you into this particular arena or realm?
Yeah, well, that's an easy one. I grew up in my family. I mean, my father was in the foreclosure business. He's an owner operator of multifamily. Now he's a private lender on commercial real estate. So, I mean, at, I don't know, 6 years old, I was doing BPOs, still remember that term, brokers, price opinions. I was in the car driving around and I fell in love with what he did. I mean, we'd go to the rough areas in like LA and I was just like amazed and intrigued. And so I always had a passion for real estate and investments and lending. And I went to school for it. And I ended up in this niche industry, but I'll stop there and before I get ahead of myself.
No, you're perfectly fine.
Yeah.
So that is awesome. Look, so parts of LA that I can imagine you probably got some stories. Now, what I'll ask you next though, Ben, obviously this arena, this space, this realm, if you will, has afforded you some tremendous opportunities to help people in creating what is a part of your company's name, which is wealth. So first, you talked about 1031. So, our folks that are seasoned has been listening to us. They know or may remember what they are, but I'm gonna ask you to define what a 1031 is, that type of transaction, if you could define that for our listeners.
Sure. And I just have to, before I hit that, I have to tell you, you're among few. Perch, you recognize a higher elevated view, if you will. I've had so many people go, "Why'd you name your company after a fish?" It's not after a fish. Come on.
That's
Anyway,
position. You're
but
positioning well.
positioning, right. A higher
Yeah,
moral and ethical high
yeah,
ground and
yeah.
better understanding of the landscape that we're in. 1031 exchange. 1031 exchanges are, I would say, the most powerful tax mitigation or tax vehicle in the code itself. 1031s have been around for over 100 years. And essentially, the IRS is giving us the opportunity, blesses us with the opportunity to defer paying taxes on the gains upon selling your investment property, right? So you own investment property, you sell it, you can defer paying the taxes associated with the gain as long as you use the proceeds to buy other like kind, is what they say, investment property. So you could sell a parcel of land and buy a hotel. You could sell a multifamily rental property and buy manufactured housing. It's just investment property for investment property. And if you do so, and there's guidelines, of course, if you do so, you don't have to pay any taxes. And that's the reason why so many wealthy business owners, I mean, just people in general, are in real estate because the 1031 Corwyn, you buy $1 million, 500,000 or whatever, $250,000 property 10 years ago. It's worth $1 million today. You sell it, you do an exchange, you buy a $2 million property, and on and on and on. So by the time you pass, maybe you got $10 million worth of real estate, and when you pass, all the taxes that you've deferred all the way along, they get wiped out. You get a step up in cost basis, and your children or beneficiaries inherit those assets for 10 million bucks. And so it's a beautiful thing.
Let's take a short break.
Do you remember your grandma's front porch? That spot where stories were told, kisses were stolen, and sweet tea was always being sipped. Now imagine giving your family a place to make those same memories, but in a brand new, energy efficient, and home that was built just for you. At Country Boy Homes, we help folks just like you find that forever feeling. Whether it's your first home, your next home, or we're done with rent forever, like seriously home. We specialize in affordable and durable manufactured and modular homes, the kind that make room for muddy boots, big dreams, and second helpings. Come see what coming home really feels like. Call 843-574-8979 today. Country Boy Homes, built to last, priced for you. So people oftentimes, Ben, look at like this type of stuff, and obviously there's a lack of information in regards to it. So then that leads to misunderstanding or, if you will, assumptions. We're definitely quick to get to assumptions. But this type of strategy has benefited people, and not just the uber wealthy, but it's benefited the mom and pops and pretty much anybody in between for generations, because it is a method to accumulate while deferring. So that space, give us an example of what that looks like. Maybe it's a recent transaction that you assisted with, or maybe one of the early ones that you did, but a situation where, let's say, mom and pop, that they employed this strategy and the results thereof.
Absolutely. Great question. So we've done thousands of these, and then we work with clients every day. But let me just think of a real, okay, I'm working with this gentleman right now in Colorado. He's held this, it was a mobile home park for 30 years, right?
Mm.
It's done well for him. He's managed it all. It's like, I don't remember what he bought it for, maybe $200,000, and he's selling it for $3 million. I mean, something significant.
That's a good
And
problem.
So if he were not to do an exchange, right, and you factor in all the tax buckets, and I'm in California, which is the worst of the worst out here, he'd owe at least $1 million of taxes. So that gentleman is going to do a 1031 exchange and defer those taxes and buy a $3 million or more worth of real estate. The other thing I want to point out, so he's going to defer the taxes, which is number one. The other thing, this gentleman, when he bought it for 250 or 500,000, maybe he was making 10% on that money at that time. He's feeling good, right? Well, at 3 million bucks today, if he hasn't been keeping up on his rents or ratcheting up rents, which most of our investors do not, right? It's all about keeping that tenant. You got a good tenant, you want to keep it.
Mhm.
Just they don't want to raise rent. And so today he's making 1 or less than 1% on that money. And so by exchanging, yes, we're going to defer the taxes, but we're also going to be able to increase this gentleman's income up to 5 or 6%. So think about that. If he's making 1% on the $3 million value today, he's making, what is that? 30 grand. We're going to step up now and he'll be making, we'll call it 5%. He'll be making $150,000. That's the power of accumulation, right? Of deferring and accumulating. Did I answer your question, Corwyn?
Yes, yes, you did. So there is benefit in this type of strategy, is what I'm hearing you say. There's a reason to do it. And there's a multitude of stories about this. So let me take you back because I want you to speak on this. If I recall correctly, and correct me if I'm wrong, but the 1031 is also referred to as the Starker exchange.
Yes.
Where does that reference come from?
That was initially what it was. I mean, the Starker exchange, that was like the initial terminology for a 1031 exchange. I think they refer to them. I mean, geez, you may have got me, Corwyn. It's just a forward 1031 exchange is like the terminology today, but Starker is where it all started. And
Okay.
you used to, under the Starker, be able to swap without even transferring cash. You'd swap one property for another. Things have changed, but yeah, that was the initial ruling when they first came about.
So let me take you a little bit further down the path of the strategies that you guys employ. You know,
Sure.
you guys work a lot with statutory trust. Yes, no?
Yes, Delaware Statutory Trust.
Okay. So give me, because Delaware is one of maybe, I think, a couple of states, I believe, where when you set up certain entities, it's more advantageous than maybe in other states or what have you.
Yes.
So if you could give us some insight into that, why Delaware?
Yeah, you said it. Delaware law is much more lenient or relaxed if open to vehicles, more so than the remaining 49 states. And so a lot of structures are actually formed, or entities are formed or enacted in Delaware. Now, the Delaware Statutory Trust that we work with, yes, it was born in Delaware, but it applies to the nation. And so what's unique, and I mentioned this on the front end corner, I'll say that we talked about 1031 exchange, right? You can defer taxes, selling investment property, buying other investment property. But speaking to your audience, you think about demographics today. You have baby boomers and seniors control the majority of the wealth in the country. And a lot of that wealth is embedded in real estate that they've worked their tails off to accumulate and manage. And these demographic groups are tired of active management. I'm sure I'm speaking to some of your audience right now. They don't want one more phone call from a tenant. Well, with the three T's, right? Tenants, termites, trash. Yeah. It's just, they don't want to deal with it anymore, right? They bust their butt all their life.
Uh-huh.
So a 1031 exchange, if little Mrs. Smith is in that bucket and she goes, okay, Ben, well, if I do a 1031 exchange, yeah, it may make sense. I can defer the tax, but it's not going to alleviate me of my responsibilities, right? I sell my property, I got to buy another property, and I got to manage that. What? I don't even care. I don't want to do it. What we do on this Delaware Statutory Trust, these are vehicles that relieve you of your management responsibilities. And if I can just take one more minute just to define
Yes,
them.
please.
So DSTs, right? What are they? It's an entity, it's a trust. It's a trust whereby you have one trustee that manages the trust on behalf of 499 beneficial owners. So when you take this trust and you wrap it around real estate, it
Mhm.
creates a fractionalized ownership situation, right? You have lots of investors owning one property. And they weren't set up for 1031 purposes when they were created in the 80s. But in 2004, the IRS blessed this fractionalized ownership structure as real property ownership and therefore eligible for 1031 exchange purposes.
So what I just heard you say was you could 1031 out of a property. Okay, look, I'm tired of the T's, termites, trash, toilets,
Yep.
and terrible tenants. You can get yourself out of that. And you can then, through a 1031, invest into a Delaware Statutory Trust.
Trust. Yeah.
With that and defer the taxes coming over and obviously continue to be paid out as a beneficiary out of the trust, but have deferred the taxes on the greater lump sum of income. That's what I heard?
Absolutely. That's what you said. Thank you for saying that. So we're at the point where, okay, well, what's in this trust? So yes, you said it, Corwyn. So the world that I live in, there are sponsors or syndicators, and I'm going to name some big ones in my space just so the audience may recognize Apollo or Cantor Fitzgerald or Invesco or Starwood. So these are big institutional real estate firms. They go out with their capital, their expertise, their relationships, and they'll buy a $100 million multifamily project in Dallas, Texas, right? They
Mhm.
buy it stabilized, 95% occupied. They hire their third party property management companies in place. They're managing everything, soup to nuts. They're paying out monthly distributions to investors. They're sending out quarterly reports, performance reports. They're sending you your end of year tax returns. And so they buy it, they put it in this DST, and they turn around and they offer ownership interests to mom and pop, you and me, 1031 exchange investors, right? So again, little Mrs. Smith sells a single family rental or a duplex or a plot of land. She's got to not only find suitable replacement property to adhere to the 1031 exchange, and they provide guidelines and timelines, which we didn't get into, but it's not that easy. But little Mrs. Smith could sell her property and go and invest some or all of her investment in this $100 million building, right? That's managed by one of these big outfits. And then going back to 499 beneficial owners per project. Given there's so many allowed, the minimums are low. Minimums are 100,000, maybe 200,000. So if little Mrs. Smith comes out with 80 years old, she sells her property, comes out with $1 million, just an example. I could take, in theory, and I could put 100,000 in the deal I just mentioned, the 400 unit in Texas, 100,000 into a self-storage portfolio into Raleigh, North Carolina, a medical office campus into Charleston, South Carolina, and 200,000 in the self-storage in Florida. What we can do is not only satisfy the exchange, defer the taxes without the panic, having to adhere to the IRS guidelines, relieve folks of their active management responsibilities, more times than not, significantly increase their passive income. And so it's a beautiful structure for so many of, again, the baby boomers and seniors that are dying to get out. They just don't know how to do it without having to pay tax.
You just blew my mind, guy. I mean, I'm fascinated by that. Obviously, 1031 like cons or similar exchange or a step up, if you will. So you have essentially a box that you can operate in. But this, I mean, it sounds, I mean, it's not, but it sounds completely outside of the box as where that is. But it's so neat in understanding that this is I won't say a recent change, but a change in law that permits this now. This should be a game changer for investors. So this is a strategy that you all employ, if I will venture to say, on nearly a daily basis?
Oh, this is all we do. This is the world that I've lived in. We have over 600 clients. I mean, place 600 million or more of equity. This is why I love my job, right? Because I am the guy, or my team, we have a solution, right, to what I would consider a widespread problem. That widespread problem being folks that they're not making any money. They don't want to manage. They don't know what to do. And very few folks in the country know about this. If I just, Corwyn, I'll tell you that. So I keep saying I've been in the business for 20 years. For the first 15, I was involved in manufacturing these vehicles, DSTs, private REITs, TICs, I mean, you name it. So I was on the syndication side, and in working with investors and advisors across the country, it didn't take long to realize that most financial advisors, your advisor that's good at stocks, bonds, mutual funds, annuities, and insurance, they don't understand real estate. And they definitely don't understand the syndicated real estate, that being DSTs. And so I was really disappointed and deflated seeing this, because I don't want an investor getting advice from somebody that doesn't know what they're doing. And again, these investors are baby boomers and seniors, and they depend on this money. So I said, look, I'm going to get out of the syndication. I'm going to start my own company, Perch Wealth, and we're going to provide true, informed, objective advice to investors. We're going to help them navigate this niche space and bring them a curated list of the right opportunities that are suitable based on their circumstances, if that makes sense. So that's
That
what we do. We do it all day long, every day.
that is, man. Look, again, I'm flat. As my wife will say, my flabber has been gasted, bruh. That is so. That concept is. I mean, it makes sense. Don't get me wrong, but it is so intriguing to me that you can do this. I mean, syndicating. We've talked about syndication on the show. For our listeners that you've tuned in this before, guys, we talked about syndicating and essentially other collectives and collaborative efforts to maximize our investing. So, Ben, the people that you work with, I heard the reference on a number of people and the amount of equity that you've created for them over these years. Give us, if you can think of one person that quote unquote is those, and mind you, we're on gospel radio stations now, but for those who listen and who say that they've been brought a mighty long way, give us an example of someone that you've assisted in coming a mighty long way from where they started to where they are financially now.
You say that, I get goosebumps. I'm not kidding, because I get these calls from not desperate, but people that don't know what to do. And I ask them for a rundown on the situation, of course.
Mhm.
What do you got going on? I got debt coming due. I'm panicked. It's going to screw me up. Okay, what are you making in income? I'm making this in income. And I know you asked for a specific example. This is so, I can't give you, well, I can, but there are so many people every day that we're helping that it's amazing. Again, if you could solve people's problems, right? I mean, that's what I live for. I love to help people. And if I can increase your income and I can defer your tax and I can relieve you of your responsibilities and give you the time to spend with your grandchildren or to travel, that's a beautiful thing. And that's what gets me going. So again, I've 600 examples for you, but that is what we do. And they're countless. And I love my clients. And
I love it. So, Ben, look, we have quickly gotten to the end of today's show, but I want to ask you this because obviously, over this journey, you have obviously faced a lot of obstacles, overcome a lot of pitfalls, etc. And I'm fairly positive when you look back over it, there's probably a few times when you said, man, I wish I'd have known this at this point or this junction. So, from where you are now, knowing what you know, if you could go back to the very beginning, what, if anything, would you have done different that you think would have had you much further than where you are now?
such a great question. Honestly, for me, I wish I would have gone out on my own sooner. I trusted in myself, trust in God, and I felt the fire. I felt the fire. I was just hesitant. You're scared. You're worried. How am I going to make it work? Is this going to work? That's probably my biggest regret, is just sitting on the sideline, probably 3 years to more than I should have. That's what I'd say. So for the audience that is thinking about going on their own or making a move or embarking on another journey, you just got to go. If you feel it, you got to go.
Ah, look here. I love that. One of the things that we are always talking about here is the lead. Just, okay, we got to go. We got to do it because sitting will not change our position at all. So, Ben, I want to thank you, my guy. Thank you so much for taking time out to be on with us today. You have been a wealth of information and an amazing resource. And I want you to be a resource to our listeners. So, if you don't mind, please let's get your contact information out there. How can people find you, reach out, get in contact with you?
Absolutely. No, it's been a pleasure. I mean, really, Corwyn, thank you so much. So our website is www.perchwealth.com, Perch wealth.com. We have 10 advisors on the team, but I also give out my cell phone number and I will get back to you. It may not be in that day, but it's 818 818-269-4972. Again, 818-269-4972. I love to educate, right? I'm not going to jam you for business. I love to educate and help people. So you can call me, go to the website, call one of the advisors. That's what we're all about.
Look, I hit the website. So listeners, guys, please go to the website. There is an amazing list and accumulation of resources there, case study, etc. One of the things I saw in there, Ben, so we're gonna have to get you back on the show, guy, is opportunity zones. You
Oh,
guys
yeah.
specialize in that. That is awesome. So we definitely gonna get you guys back on to tell our listeners more about that. And because that's how you get this thing right, man. That's how you get this thing right. So I'm super excited about that. So
Thank
Ben,
you.
again, one more time from me to you, man. Thank you so much for taking time out of your busy schedule to be on with us today. From the bottom of my heart, I really appreciate it.
Thank you. Appreciate it.
Uh, For our listeners, guys, hey, y'all got it. Y'all better do something with it. Y'all know how I feel. You know what I say. You know, always put two of those things together. And I give it to you this way. I tell you that I love you. I love you. And we're going to see you guys out there in those streets.